What if I told you that one of the most powerful money rules in the world is over 2,000 years old and it still works in 2025? It's not from Wall Street, not from Silicon Valley, but from the ancient wisdom of Jewish scholars. And today, we'll uncover how this rule can protect your money, grow your wealth, and give you financial freedom, even in America's uncertain economy. Welcome, future millionaires. This is Wealth Motive, where we talk about money, mindset, motivation. If you're serious about building wealth, make sure to join us because today's lesson might be the most timeless financial advice you'll ever hear. In the Talmud, an ancient Jewish text, there's a simple money rule. Divide your wealth into 3 parts: a third in land, a third in business, and a third kept in reserve. Translated into today's terms, this means 1/3 should be invested in safe, tangible assets. 1/3 should go into business or productive investments. And 1/3 should remain as cash or reserves for emergencies. It's simple, it's balanced, and it has survived centuries of wars, recessions, and financial crises. Now let's connect this to the United States today. In 2025, the American economy is uncertain. We're seeing inflation pressures, rising interest rates, and even stock market volatility. If you put everything into stocks, you're exposed to Wall Street swings. If you hold only cash, inflation eats your savings. If you tie it all in real estate, liquidity becomes a problem. But the ancient Jewish rule of thirds gives balance. Think of it like this in modern American terms: 1/3 in safe assets, bonds, index funds, or real estate you can hold long term. 1/3 in productive investments, your own business, side hustle, or even shares in companies that innovate. Think Tesla, Apple, startups. 1/3 in reserves, high-yield savings, cash, or short-term T-bills, which in 2025 are backed by the U.S. Treasury. This is essentially diversification, the same principle the SEC and financial advisors in the U.S. preach every day, except the wisdom is thousands of years old. Let's take some examples. During the 2008 financial crisis, many Americans who had all their wealth tied up in real estate lost everything when the housing bubble burst. But if they had followed the rule of thirds, keeping some in reserves and some in businesses, they would have survived. In 2020, during the pandemic, millions had jobs, but no emergency fund. Over 50% of Americans said they couldn't cover a $400 emergency, according to the Federal Reserve. Imagine if they had kept that 1/3 reserve, the stress and debt could have been avoided. Warren Buffett, America's most famous investor, often reminds people, do not put all your eggs in one basket. That's basically the same principle taught in the Talmud thousands of years ago. So how can you apply this in your own life right now? 1. Write down your current net worth, whatever you have. 2. Divide it into 3 categories: O, safe assets; long-term stable investments; O, growth, business, stocks, side hustles; O, reserves, cash or emergency funds. 3. Rebalance as needed every year. It doesn't matter if you're managing $1,000 or $1 million. This rule scales. The ancient Jewish money rule is not just about numbers, it's about mindset. It teaches us balance, discipline, and preparation. In America today, where financial uncertainty is everywhere, this wisdom is more valuable than ever. Remember, money, mindset, motivation. That's the WealthMotiveHQ way. Subscribe, and together we'll unlock more timeless wealth secrets to build your future.